Welcome back, everybody. Today I'm doing my weekly review. This week was pretty crazy. Basically set myself up for a margin call. And let me tell you, if you put your phone on mute, that doesn't mean you can't get the margin call. This week was pretty crazy. I sold a lot of plays to get some theta burning. I did some aggressive plays, we'll call them for now, not just straight up gambling in the stock market this time. And we'll talk about what I saw in all these trades and actually break down a lot of trades today. So this video might go a little long. And then let's go ahead and just jump right into it. So first off, let's look at the overall view. And you can see that this week I ended up actually down about $7,154. Thursday morning, my account actually hit like an all-time high. It was at 225, so that was pretty cool. But obviously Thursday afternoon was a different story. And then Friday, wow, SPY went even further than I thought it would, going down. So a lot of stuff went in red, that's for sure. Something else I noticed on Thursday is that I passed my year goals already, or at least temporarily I did. So in a video that I put out on December 31st, I said my option goal was to get my account to $217,000, and I actually got to 225 on Thursday, but since then we actually dipped back down, so we'll just have to hit that goal again. And this number was estimated that I would have a 15% return for the year, and then deposit 12,000. I have not deposited 12,000 yet. Like, this has been a pretty good year for me so far, even though the stock market overall seems to be going down. So it's pretty neat that this is just showing you that you can still be profitable trading options, especially if you're willing to take a couple of risky trades, I guess. So that did bump my months to millionaire down to, or back up to 32, because we just lost 7,000. Quick overview. I've realized almost 5,000 in income for April through option trades. I haven't updated the dividend column yet, so don't look at that too much. Options, we'll get into that in a second. This is stuff that I have on. My risk, or my notational value, is actually pretty high, 146,000. And this kind of assumes that everything goes to zero, which obviously it's not going to. And if it did, then there'd be other things to worry about other than money. So that's what my notational is. Let's start looking at the trades. We'll start with the not so horrible ones first. And if we look at this, you see I'm going back to my normal thing, and I'm selling puts on stocks that I can get like a 1% return on over the course of a month. And we'll look at these real quick. So first off, we have Ford. And what I was looking at for Ford is, quite frankly, there's a lot of volume for it to get down below 14. And so that's why I thought I'll go ahead and sell a put on 14. Now, that is going through earnings, so it's a little bit more risky than I would normally be. But Ford at 14, I think, could be a buy. I wouldn't mind doing it. I think I only put one contract on, so that's not terrible. Yeah, I only put one contract, so it's a $1,400 risk to make $42. And was that like a 2% return if Ford stays above 14? Next up was Ally. I've been playing Ally quite a bit. It seems to like this 40 area. It tends to stick around 42, it feels like. Obviously, since I sold these, like Ally was sitting up here at 45 when I sold the 40. But you can see 40, it just tends to stick at. That's like the 52-week low, even. Although I'm not so happy now that we're getting below the volume and into uncharted territory now. But at least we're already through earnings, so we don't have to worry about that. And again, and it's another play I think is just a nice 1% return. If I get a sign on Ally, I can hold it. And that's kind of what a lot of these positions are going to be like. Next up, we have Robinhood. Ugh. Okay, so Robinhood is one of those stocks that doesn't really fit my usual plays, and that's because, well, quite frankly, I hate the company. I don't think there's any company I detest more than Robinhood, from just all their like sleazy practices, and like it's just horrible. I think I hate them even more than Facebook or MMM. You know, I'm not a fan at all with how they do their commissions and everything. It just feels so shady. Anyway, I got tempted by the premium, so I was able to sell a $10 put. Sorry, the $10 strike Collected 40 cents for it. So that's about a 4% return on risk. And that's a 30-day hold, I think it was. And basically what I was seeing is Hood is at like all-time lows, so it's more likely to go up than down at this point, I would hope. If it goes any further down, you just gotta think that value investors will have to start picking it up based on the valuation of the company. So I thought it was a safe-ish play to do, but still, I only did one contract. I don't want to put too much money in a Hood in the worst case scenario that I was get assigned. Even though we all know I tend to run the no assignment strategy, so I'll just roll the put indefinitely. But I like to think of my plays as though I'm going to be assigned. So worst case scenario is I take the stock. How do I feel holding that position? And Hood is not one I really want to have a lot of money in, but $40 on 1,000 risk. I decided to go ahead and take that, get a couple little plays in. And a lot of these plays that I put on Monday were actually up around 40% to start. And I think it was Wednesday I put in in one of the Discord messages, maybe I should close all these plays out. A lot of them are at 60%. Turns out, yeah, I probably should have. AMD, I already had a bull zebra set on AMD, and I ended up buying up another one on Monday. So to bring down my cost basis and get to bring my break even down if AMD does go up. It did go up to 98, so I wasn't back in profit town for a little bit. But as we know, later on in the week, it's been going down. Although on Friday, while the stock market was bleeding heavily, AMD really didn't follow that. Like, it started to show a little bit of strength, actually, I felt like. So I'm not upset with going bullish on AMD at this point either. I feel like it's kind of found that bottom. And if we start with a green market come Monday or Tuesday, I think AMD just kind of goes right back up. And this is a position that I'm willing to hold through earnings, or at least that was the intent when I was there. But when we get down to some of these other trades that are blocked right now, you'll see I did change that a little bit. SPY 420 put. Again, that was pretty far out of the money at the time. And I said before that I want to get like more passive in selling some index puts, just let it sit there and burn. Now, when I sold this, we were sitting at like 440, 442. So I thought 420 would be pretty safe. Again, if you look at the volume profile, you'd think 435 would have held on a little longer than it did. Obviously, Friday we went right through 435. I said before I thought 430 might get tested. I didn't think it was going to be tested this quick, or this, in 2 days to drop 20 points. It's pretty huge. But anyway, 420 is kind of where this bottom was found before, and it's just a little bit down to get to the all-time low here. In which case, I figured that you can always roll the put out. So that's why I chose 420 for that SPY put there. Next up, we have Virgin Galactic. I don't think we really need to look at the chart on this one. This is just a company that I like long-term. It was trading a little bit over $8 when I sold this put. I think it was at like $8.50 or maybe even like $9. And if I got assigned at $7, I would actually take the stock in this scenario because I do think eventually Virgin Galactic will go back up. It just may not be in this year. So that might be a long-term like bag holding type of scenario. We do have earnings coming up, so who knows what will happen. Maybe it'll go up and those puts will expire worthless. If not, then I'll have some more Virgin Galactic in my taxable account. And I think I got some decent premium on that one, didn't I? We got, sorry, where is it? 30 cents for 7, so that's a pretty good return on risk there. So for every $700 risked, I got 30. I did put 5 of those contracts on because I do like Virgin Galactic long term. It just may be a long time before it goes up. CHWY, I sold a put on CHWY. I've been making some easy money on CHWY recently, it seems like. And when I sold this, it was trading around 40. What strike did I sell? Let me pull that back up real quick. The 30 put for May 13th. So again, another trade that's 30 to 45 days out. And if we look at the chart here, the low before this was 35, so it's $5 under the 52-week low. And just CHWY's been trading around 40 forever. So I thought this was the end of the dip here. I was turning bullish on the market this week, so that's why I chose to start selling some puts again. It turns out maybe I should have waited another week, or I should have taken those quick gains on Wednesday. But again, looking for that 1% return minimum. We got $30 strike, $34 for the premium. That's a 1% return. I think it was a 30-day hold. Microsoft, again, I only sold this one because it was a 1% return. So 265, 290, a little over 1%. And the strike price was so low that I thought it would be pretty safe here. Should we go to Microsoft? Maybe not so safe anymore, but we were trading above 287 when I sold that put. And we had some volume here that I thought it would take a while to chew through. Again, Friday, we chewed through everything. So I'm not as happy with this position now. We do have earnings coming up. I didn't realize that at the time, or I didn't actually realize that until right now. So that might be a position I close Monday, or looks like earnings is Tuesday, so there's time to close it. So that might be closed for a loss just because I don't want to hold that through earnings. So yeah, even I make mistakes. Let's look at the next play. SPY 410s. I sold that on Friday. When the stock market opened down, I thought this might be the new bottom. So I sold the 410. We continued down. I'm not too worried about the 410. This goes out till June. I'm sure we'll recover by then. And again, a little over 1% return, $520 on an index. And then I also sold a put on IWM. And that's because IWM, it doesn't seem to go down to 180, at least recently it hasn't. We were trading at about 195 when I sold the 180. I thought 15 points might be enough. We'll have to wait and see. I'm still bullish on the market. I think people are starting buying in, so I'm not too worried. And I think a lot of these plays are showing red right now, but my actual strike prices are not being tested in the majority of those positions. I'm not too worried. Now let's get to the good stuff. So, number one here. Netflix, I sold a 300 put for April 22nd. And we know what happened with Netflix. So I sold this on Monday, so that'd be 418, when Netflix was trading above 340. So it was like 340 points. And it's giving me some pretty nice premium. Let's go ahead and sell it. Now, when I put this trade on, I did not look in Thinkorswim. So I did not see that there was earnings coming up. And a little bit after I put on the trade, I was sitting there thinking, like, wait, that premium seemed really too good for a weekly put on Netflix. Like, I used to trade Netflix all the time. So I was like, something has to be up. I Googled Netflix and found out that earnings was there. And I did the whole facepalm thing. Like, this was a dumb trade. I'm not holding this through earnings because, I mean, look at what happened last time through earnings dip. Like, this sucker can move pretty fast. And so I went ahead and closed that trade out immediately once I knew that. And it didn't matter if it was going to be a gain or a loss. I would just close that just to be out of it. It just so happened to be a $40 gain in my favor for putting that trade on, for just making an oopsie. So the market gave me a freebie on that one. And you guys saw what happened after earnings. It dumped horribly. Then I made a video warning people to not sell puts at open the next day because it might go further down. And so it opened at like 240 and then continued down to almost 212. So I hope people did not get caught in that, like, fall down there. I know there are some people that are going to be rolling some puts for a while as a result of this earnings play here. And it's looking like it is finding a bottom here. I thought 185 might be the absolute worst bottom. Looks like 210 might be a sticking point. But after a bad earnings, we've seen that Netflix does run down for a couple of days. So Monday might be where the last day that goes down, or you might start seeing it going back up at that point. So hopefully you guys get some good luck there and somebody buys it up. Going back to here, crazy trade number 2. Like, these are the trades that, like, I would not recommend doing. Like, these are pretty aggressive. Like, you can either make a lot of money or you can lose a lot of money pretty quickly. And so that's why I want to put them back in a different category and save them for here. So Amazon. I did a quick day trade, and I bought the at the money puts on Amazon for a quick swing down. I think it moved like $2. I immediately closed it for a little $500 gain here. All right, so I actually sold this on Thursday, and where this happened was I sold it at the money. So it was right about here that I actually sold it. So unfortunately, There wasn't much of a dip here to take advantage of, but I thought the weakness was going to continue for a little bit on the stock market here. SPY was bouncing off of a key level for me, and so I thought there might be just a couple dollar movement down still. So I went ahead and bought 2 calls. Netflix dropped a little bit here. I think I actually sold at the bottom of this candle here, and that was enough for me to make that profit because I think at the same time IV increased, so that helped me get there. Now it turns out, had I not closed the position and taken a quick gain there, those puts would have made like $20,000 by the end of the day. And then had I held those through Friday, it would have been like another 20,000. But that's the problem with the hindsight game. It's not helpful at all. It was a quick trade, not really recommended, but I just saw a lot of things that lined up from when I used to do Amazon that I had to take a stab at it, and I did. Came out with a little gain. Didn't get greedy. The next kind of risky trade was Netflix. So I said not to sell a put, and it actually turns out that I bought some puts as a result. So I bought the 2250 put. And that was here. So again, I decided to play at the money for a quick movement down. And what I saw here was just massive volume, systematic volume that was just going on. If we go to the daily here for 1 year, like you can see that volume was insane. Somebody big was unloading. I put it in the Discord server that the steady climb down is some big person or player unloading their position. And then later, someone actually posted a message in the Discord showing that someone massively did. They locked in a lot of losses as a result of doing that. But the volume was just so huge, and it was just systematic. If you're unwinding a huge position like that, you're gonna have to break it up into different trades so that you don't actually cause a massive spike and just lower the price before you can get out. And that's what I was just seeing, like every minute, steady volume. And it was clear that someone was unloading slowly, trying not to drop the price too much until they got out. And so I decided I would take advantage of that and take a little ride on it. So at 222, I bought some puts. When it hit like 220, I went ahead and closed it, got my little nibble, and got out. And you can see it's traded pretty flat for the rest of the day. But yeah, there was a lot of volume, especially at open, that somebody was just dumping their position. I know it said it was being oversold, but I highly doubt that that was the case with the RSI here. So again, another trade that only lasted like 5 minutes, like to get out of that. Trade number 4, Amazon puts again, pretty similar. 31.20 this time. I think this one was actually on Friday, and that was more so a play that I saw SPY was getting up to 450, and then everything on my watch list was just turning red, so the market was going to dump a little bit. I thought like SPY might pull back like $3, maybe $4, and so I decided to ride that market trend down by buying some puts on Amazon. Got in, got out quickly for a small gain. I did not think SPY was going to keep going down massively on Thursday. So it was yeah, that was still Thursday. So, right? Sorry, I'm going to check that real quick. Amazon 3120. 421. Yeah, that was Thursday. So basically, that was a play on the overall market, not necessarily Amazon, but I knew Amazon would follow the market. So that's just what I chose to play on. I'm going to be sad to see Amazon split, because it's been pretty nice to have those like big moves. Like a $1 movement on Amazon is nothing. So it's going to follow the market pretty quickly. It's just, it's been a fun stock to trade because it's so big, and it seems to have been pretty predictable for me. Next thing that might have been questionable is the AMD management, we'll call it. So I saw the short puts of my zebras were at like 83% profit. So there was not much theta left there to burn off. And in fact, if AMD does start going up, then it would just kind of fight those gains. So I decided to go very delta heavy and close those short puts because at this point they've served their purpose. They eliminated a lot of the extrinsic value that would burn from theta at that point. So they were no longer going to be a help for this position. I think they had like, well, if you look at what I closed them for, $1.74. So the only like extra benefit they would bring is if stuff continued going down, I'd make back like $320 or $340. So close it down, took that gain, and then I decided to actually double down on my AMD play because again, I'm feeling very bullish on it. And we still have earnings to go through, so IV is going to climb. And so I actually bought 4 more calls at the 95 strike at 440, which lowered my cost basis of the AMD calls to like 770, I think it was. You can actually look it up here. 1 second, please. Or 720 even, or 719, even better. So I now have 8 calls on AMD for May 20th, so there's plenty of time to see the market go back up and AMD go back up. If this position gets to like 20% profit before earnings, I'll go ahead and close it down, take that gain, and leave. If it's not at that point, I think I am going to ride this one through earnings because I just think it's going to go up. I just have a gut feeling, but it's kind of a risky thing. I'm buying, so I basically just have bought out of the money call options, something that we always say don't do, don't do, don't do. And I just think this might be one that's worth doing for me. Worst case scenario, I lose the money that I bought the calls with. And it's still a significant amount. If we multiply that out, I think I actually have it over here. That's $5,752 I can lose if AMD does not go up by 520. And that's actually quite a bit of money. That's like a month and a half of take-home pay for me for my real job. So, I mean, that's a significant amount of money, but that's a small percentage for my portfolio. And I think like it has the potential to really pay off. Like if AMD shot back up to 110 very quickly, each contract would be worth at least $1,500 multiplied by 8, and like we have a pretty sizable gain potential on this play here. So that's kind of my gamble going forward here is the AMD long calls. So not really recommended. Only put on what you can afford to lose. You know, that whole thing. And then 6. This was a crazy one. That's why we saved it for last. A lot of things with this one went kind of crazy. So at the end of the day Friday, I decided to go ahead and try to make back some money because I was down significantly on the day. And I'm trying to basically revenge trade, but I decided to do it through Tesla. I thought I saw a weakness, and so I bought a slightly in the money put on Tesla. And my break even would have been if Tesla gets down to like 104.40 at expiration. But there was only like 10, it was a little bit more than 10, like 30 minutes left in the market at that point. And Tesla did get down to 1,002, and this position was actually up like $1,800. But I got greedy and was like, if Tesla gets below 1,000, that sucker can run, and I could really make back a lot of gains. So I didn't lock in that huge win. And then Tesla actually shot back up to like 10.15, 10.18 even. And so this position was actually showing like a loss of 2,200 at one point. But again, the market SPY was still selling down. Like there was just a lot of pressure going down. So I decided to just go ahead and let that $500 play out. And then with like 5 minutes remaining, I had like a sell to close order at like 750 on this play. A storm started in the area and was interfering with my internet. So completely lost access to the internet during this time. So I couldn't adjust my sell price on my close order. So I was like panicking, like, oh no, gotta do it on the phone. And like I've never traded through interactive brokers on the phone. I just use that to look at my overall portfolio. So I had to like figure out how to trade the option or close the option through the app. And I like was worried that I might not be able to authenticate in time. Like it was a nail biter because if I wasn't able to lower my price to get out, this position would have finished in the money, which means I would have sold 500 shares of Tesla to someone because the option would have been automatically exercised, and I would have been short 500 shares of Tesla. That would have put me in like margin call territory. I think after market I would have went and bought the shares at whatever price it would have been at to like cancel that. But with interactive brokers, they don't really give you time, I hear. So who knows what they would have done to bring me back up to imaginable liquidation. So that was a scary situation. Another thing that annoyed me, but I guess it makes sense, was when Tesla shot back up to like 10.15 and I still saw more weakness. I wanted to, these puts were down to like a dollar each, even under that. I wanted to double up and put an extra $500 into this trade to, bring down my break even, probably get out a lot quicker. Like if these options went back up to like $3, exit with a profit. So I wanted to like add an extra $500 to really drastically increase my chance to get out. And interactive brokers would not let me do that because they predicted that the auto exercise, if after the option got exercised, I would have been $160,000 like over my margin liquidation thing. So they wouldn't put the trade through, but like I was always like, no, let me put it through. I'm going to close this before market close. So that kind of surprise annoyed me at the time. It makes sense, but like I always close my positions. Like, give me that freedom. Although looking back now, since I had that issue with like internet being lost at the end of the day, I understand why they put those safety protocols in place, because you never know what's going to happen. So that's just something else to think about. Like, if you're playing expiration date contracts, like, don't just wait till the last 10 minutes, because you never know an act of God, and you might not have access to your broker to be able to manage your positions. And if you can't afford assignment or the options to be exercised, that might put you in a sticky situation. So plan ahead. Make sure you have like an alternative method to access it. For me, I had to go on my 5G on my phone to execute those trades. Otherwise, this put would have been very interesting to figure out what would have happened, I guess. We'll leave it at that. If you haven't joined the Discord server yet, please do. There's a lot of knowledgeable people in there. They share their expertise and help everyone that they can. And I'll see you guys next time. And thanks for watching.